Let's get you all the business news of the day now. And markets reverse losses to advance in the last leg to trade to end at a fresh record high on Tuesday. IT and non-banking financial companies advanced while media and healthcare sectors were under pressure. Hiral Dadia with the wrap of all the market action today.
An absolute interesting day for the markets is what we've witnessed, because we actually reversed the kind of losses that we saw in the first half of the trading session, where it picked up steam in the last hour of trade and ended almost near the day's highest levels. Nifty ended above the 18,800 level, whereas if you see Sensex gained almost 260 points, which was mainly led by auto, power as well as the realty players. If you see in terms of markets, clearly 150 point, little over that kind of a recovery from the day's lowest levels we saw in terms of Nifty 50, whereas a little over 400 points recovery from the day's lowest levels is what we've seen from Bank Nifty in today's session. In terms of sectoral indices as well, majority of them ended in the green, and the broader markets saw gains of around 0.5%. Tata Motors hit a 7-year high in today's session, and it was the top gainer on Nifty 50, followed by HCL Tech, HDFC Life Power Grid as well as Eicher Motors. In fact, comments from Honorable Minister Nitin Gadkari, something which gave a boost to a couple of counters in the auto ancillary space as well. On the losing end, Bajaj Twins were the top losers, followed by Sun Pharma, BPCL as well as Divi's. Insurance stocks advanced in today's session, so HDFC Life, ICICI, SBI. You had diagnostic chains as well as hospital companies, the healthcare companies were advancing in trade as well. In terms of the newsmakers, Bharti Airtel was in focus as well for an IoT solution that they would be providing. Piramal Enterprises gained the most in the last 4 months. Timken tumbled after 10% after their foreign promoter actually offloaded 10%. Subros hit a 60-month high as Honorable Minister Nitin Gadkari has mandated AC driver compartments for truck drivers. So strong moves coming in for the other AC makers as well. IIFL tumbled in trade after SEBI has taken a ban on taking new clients for IIFL Securities. HDFC AMC on the back of a large block deal was in focus. Indico was in focus as well, and you had a brokerage which is overweight on the counter. BEL on the back of an order win, and you had a Bank of Baroda. JP Morgan has an overweight rating, and you have a Container Corp as well, which actually dropped the most after a Kotak rating cut. So a lot of newsmakers in trade today, but the highlight of the day was the markets, the kind of recovery and the kind of buying that we saw at lower levels. Back to you.
Now, Neeraj Shah spoke to Gaurav Mehta of SBI Funds Management about the road ahead for the Indian markets. Listen in.
There has been a growing confidence that the worst of liquidity tightening is behind us. And that's getting reflected in 10-year bond deals across the globe, including the US, India, and so on. And I think post the SVB scandal, you also saw some increase in Fed's balance sheet size. You know, obviously a large part of that was to do with emergency lending and so on. But I think broadly this narrative that the worst of liquidity tightening is behind us is shaping up, and that's leading to, some increased flows across risk assets globally. But then the other thing is also true, which is that, if you think of confidence in economic growth, that also has come off over the last few months. We track the global money supply growth data very closely, and that data has continued to weaken over the last several months. So money supply growth is not growing anymore, and that in turn should mean that going forward, both inflation and growth should come off. So, amidst this backdrop where on one hand, liquidity related tailwinds sort of headwinds are behind us, but on the other hand, growth related headwinds are ahead of us. I think this has been an interesting market environment where, a lot of these flows have not gone into pro-cycle assets. They've gone into relatively defensive assets. So US equities, for example, if you think of it, last 2 years were largely dominated by, small caps doing well, value stocks doing well, and so on. But the last 3-6 months have been a very different complexion where, again, Nasdaq has taken the leadership, growth stocks have come back. So, on top of it, the surface looks fine. There are flows and so on. But when you look at beneath the surface, it looks like these flows are still very defensive in nature and not very pro-cyclical in nature. India obviously has been a different story where all kinds of stocks are doing well. But I think, if you are in an environment where global growth slows down, then I think you will have some rub-off on Indian growth as well.
Markets regulator SEBI has banned brokerage firm IIFL Securities from onboarding new clients for 2 years. In an order issued today, SEBI charges the firm for violating the fund segregation rules Following this, stock saw a dismal fall of 19% in trade today. My colleague Alex Matthew joins us with more.
Arguably the stock of the day, but for all of the wrong reasons. IIFL Securities losing about 19% in trade at one point before clawing back ground. It still lost over 15%. And this is on the back of a SEBI order that came in last evening that barred the company from onboarding new customers for a period of 2 years for what SEBI said was a flagrant violation of segregation of funds rules. And this is between a period between 2011 and 2017, and on the back of 6 separate investigations that were conducted by SEBI. 4 charges have been levied by SEBI against the company, and that includes a failure to appropriately tag bank accounts. The second is mixing of its own funds with clients' funds, the misuse of funds by clients with credit balances for the benefit of clients with debit balances, and fourth, misuse of funds by clients with credit balances for the settlement of proprietary trades. Now, all of this has culminated in that ban. Of course, the company has said that it will contest this SEBI order and it has approached the Securities Appellate Tribunal. We'll have to see how that pans out. In the meanwhile, it's seen as a huge negative for the company because all of this is a perception game in a very competitive marketplace where the discount brokers have taken a lion's share of the pie. You have IIFL Securities that had about 4.8 lakh active clients at the end of March, that is at the end of the last financial year. There is concern that perhaps with this latest order, the company will lose active clients and also potentially employees. So we'll have to wait and see how that pans out.
We spoke to Avinash Gorakshakar about the road ahead for the company. Listen in.
No, I think, Hiral, the ban for not taking clients for 2 years is a major setback for the company because that means that other, players like Angel One or maybe HDFC Securities, which is in the unlisted space, could obviously get a share of the market. My sense is that, the company has released a press release saying that they would appeal against the order and it's an old order where the rules did not apply. But I think till that time, it's better to stay away, rather than looking at, buying a falling knife. I would say that let some more clarity come in because the stock has actually been down by almost 17 to 18% today. And I think, buying such companies at such levels, unless and until we get some more clarity on the matter, I think it's better to stay away. I think existing investors should hold on. They should also not panic. But I think obviously if this order is fructified and actually goes through, then I think it's going to be a little, damaging for their business because next 2 years they won't be able to add any incremental business. Of course, the existing customers would obviously continue, but this is definitely a major setback for them.
Shares of HDFC AMC rose the most in over 10 months. This after co-promoter ABRDN Investment Management fully exited the asset manager. Smriti Chaudhary joins us with more details.
The HDFC AMC stock rose 11%, the most in the last 5 months, as the co-promoter Aberdeen Investment Management exited the company. The UK-based investor sold 10.2% stake, seeking at least 3,900 crores at the lower end of the price band. The price band for the stake sale was 1,800 rupees to 1,892 apiece, which was a discount of about 4.9% to Monday's close. Aberdeen has been selling stake in the AMC and this was the last lot, removing a key overhang for the stock as the street believes that the major selling is now over. The frenzy in the stock isn't because of any earnings news, but just that there won't be any more big selling in the stock. Aberdeen had previously divested 5.5% stake for a little over 2,300 crores through an open market transaction in August last year. HDFC AMC has doubled its assets under management in the last 5 years to 4.36 lakh crores. KR Choksey expects the company's total sales to expand about 8.5%, operating profit to grow 8.2% and net profit to rise by 7% over the 3-year period of FY22 to FY25. HDFC Limited now remains a lone promoter entity of the AMC. This comes on the heels of the largest merger between the HDFC twins. Post the merger, HDFC Bank will be the promoter entity in the AMC.
Now, Monal Sanghvi spoke to Jupiter Lifeline Hospitals ED and CEO Ankit Thakkar about the upcoming IPO. He shares details and the company's plans for further expansions.
We are raising around 600 crores in primary, and we have some OFS component from some of our shareholders.
Total, how much are we looking at, sir? How big is the IPO?
So the OFS will translate into whatever valuation it comes to. The primary is quantified at 600 plus crores.
Okay. So how are we planning to use these 600 crores?
So we have just two purposes. We are going to retire our debt, which is around 460 odd crore, and the balance is for general corporate purposes.
So we're not planning to use any amount towards expansion plans, is it?
So currently we have fixed deposits and cash reserves on our books.
Okay.
And once we become debt free, there will be a lot of free cash flow generated. So we will use that.
In other news, Byju has laid off around 1,000 employees across departments. The fresh round of firing comes at a time when the company has entered into a legal battle with lenders in the US. Sakshi Bajaj with the details.
Byju has laid off close to 1,000 employees across departments as per sources to NDTV. Now, NDTV has also learned that the fresh round of firing comes at a time when the company has entered into a legal battle with lenders in the US and is also increasingly now focusing on profitability. Remember, Byju has already cut 2,500 jobs in 2022, and the latest round is in line with their cost-cutting measures aimed at achieving profitability at the group level, sources told NDTV. However, this isn't the first time we have heard of layoffs in the tech and startup world, both globally and in India. Remember, Byju employs around 50,000 employees and is one of India's largest startups that had attracted global investors such as General Atlantic, BlackRock and Sequoia Capital over the past decade.